As Nigeria continues to navigate the complexities of its economy, including surging inflation, FX and lending fluctuations, the success of its economic system would depend on the government's ability to implement its policies effectively and adapt the changes to changing circumstances. Nigeria, being the largest economy, faces a unique set of challenges and opportunities that require a comprehensive strategic approach to economic management. This perhaps is why the federal government's development plan is targeted at promoting economic diversification, reducing poverty, and attracting investment into the country. But how crucial are these efforts? Let's get talking now. I'm being joined by partner, tax reporting and strategy, PricewaterhouseCoopers. He's a friend of the house, starting the week with us, Mr. Kenneth Erikume. Thank you so much. It's good to have you live in the studio.
Thank you, Tolu. I said I'll come live, and here I am.
Interesting, after meeting you in Abuja. Well, it was after the meeting in Abuja. I think that was when the MPC meeting, I think it was a week after. Will I say, were you expecting that increase? But we've seen the increase now. What really, now I think the next thing is the implication of this for the entire business community, in your understanding. Let's start that way.
All right, thanks, Tolu. First of all, I would say it was expected.
Okay.
I know the second time they increased it, I wasn't really anticipating it for obvious reasons. And those reasons are around whether we have put in place sufficient mitigation for the impact of that tightening. However, when you look at what the central bank is trying to do, clearly everyone who analyzed the situation anticipated that the central bank was actually going to increase the monetary policy rate. And the reason for that is twofold. The first one, which is obvious, is the inflation.
Okay.
Hanging around 33 to 34%. Like I say, the textbook reaction, which is expected, is for the central bank to react to that by tightening, essentially increasing interest rates. And once interest rates are increased, it would then mean that people are not inclined to hold on to money anymore or to spend, but rather invest. And when I say invest, there are two types of investment. You got to either invest in, equities, or you could invest in debt. And since the interest rate would warrant higher yields in terms of interest rates, people will then begin to lend. And that would, sort of curb the money in supply and move it into the banking system. However, our issue around inflation is not just, it's not something that can be dealt with by just one dimension. Because we have the cost push coming from the FX, the removal of fuel subsidy and all that. And soon we may have built-in inflation coming across as well. And maybe I backtrack a bit. Apart from the fuel subsidy removal, we've also had increase in the price of energy as well. If you're in band A or band B, the impact could be massive. Upwards of 300% increase in the cost of energy. And then if the plan to increase minimum wage kicks in with all the pressure from NECA and other stakeholders, it then means that, while you're dealing with this, with increased interest rates and all that, other things, other factors will come into play because people will begin to demand for more. So like I said, it was anticipated, but let's not forget, the other reason why it was really anticipated. And you saw the reaction of the market once the interest rate went up, that even, the costing of the dollar from a Naira perspective was actually curbed as well. It fell from 1,500 or thereabouts and came down. And why does that happen? When you increase interest rates, you actually empower your currency. You begin to see, foreign portfolio investors coming in to take up debt instruments, and that will mean that your currency is now attractive for those sort of investors. So those are some of the dynamics. And even from a speculation perspective, you want to say, well, I want to hold dollars and keep value in dollars.
Yes.
But the devaluation has happened, significant devaluation. Would there be further devaluation when you compare that risk compared to the cost of funding in Naira terms, which has now been increased significantly? Would you rather borrow to invest in dollars, or would you move in the other direction? So in terms of dealing with the issue of speculation as well, I think this was the right move and expected by the central bank. But like I said, there'll be massive impact because one of the things about increasing interest rates, you may bring the inflation down.
Yes.
But on the other hand, there could be significant slowdown in GDP growth. And why would that happen? It would happen because, first of all, entrepreneurs would avoid taking risk. So how do you take risk?
Borrowing is expensive.
Because
it's not encouraged.
It's massively expensive, right? So you take the loan and you're paying upwards of 30%.
What sort of business can you do to make profit?
If you are a businessman,
yes,
it might actually make more sense to sell off your plants, your machinery and everything and invest in a debt instrument that will yield you 20-something percent. Because if you do your normal manufacturing, your margins may not yield 20-something percent. So you could see that sort of impact from that dimension. But there's also the other dimension of housing, in terms of the demand for housing and the real estate business, how that will perform. Just think about people who are taking mortgage loans, by mid last year, and they have to pay out that mortgage over 20 years. Mm-hmm. Just by these increases, if they did not plan properly, they'll be significantly exposed. And new mortgages will be very difficult. So the primary, the mortgage industry as a whole would be massively impacted. But, other than that, there's the credit risk element. When you look at the banking and financial institutions, the risk of default of loans and non-performing loans could actually escalate. And therefore, how they identify their customers and how they, distribute the loans will be massively important. And for corporates as well, how do you deal with this as well? Because many of your customers would also be impacted by this. And with competing obligations, when you're looking at obligations from the banks and obligations to pay you when you've delivered a service, there could also be increased credit risk from that dimension as well. So overall, I think we need mitigating strategies to deal with the issue of the slowdown in the economic performance. And I think that's where, at the second time when I didn't anticipate this, I actually believe that there's a lot of work that government needs to do in that space.
Now, we're going to get to that point of a lot of work, particularly at this time where the administration is talking about 1 year in office, reeling out the positives, the bold step that has been taken and all of that. But my question now would be, how do we manage that balance between economic growth and controlling this inflation?
Yes, thanks to Lou, and that you've already highlighted it. What are those things that government can do, in this space? Because the reality is that when you look at other countries that are facing this, sort of effects from their currency and inflation, they've all reacted in this way. So let us not be surprised that the government, the central bank, has taken some of these actions. So it's actually anticipated. You look at Ghana, you look at Argentina, you look at Egypt. Some people talk about our devaluation, and they sort of expect that Nigeria should perform than all these other countries. It's not possible. We can't put our heads in the sand like ostriches and not expect that some of these things will happen. However, it is how can government deal with this? And I think the first step is actually the synergy between the monetary policy and the fiscal policy. There has to be coordination from that perspective. And I like what the government has done in actually ring-fencing the central bank from monetary policy. But there has to be some interface where both parties actually sit down and orchestrate and identify what they need to do to deal with some of these issues. So that monetary policy, fiscal policy coordination, I think is actually important. Government now needs to start thinking about infrastructural investment in critical areas. Areas that would yield high return of investment within a very short period of time. And the traditional dimension of state governments and federal government looking at roads as the silver bullet for infrastructural development has to be packed aside. We now need to start thinking of what can we do to spur the small and medium enterprises. Play in that space. Is it within the markets? What sort of infrastructure do we need to provide? Is it in the dimension of industries? What sort of infrastructure do we need to provide? And those things could be simply things as properly structured markets and things like that. So those will be important. Another thing they need to think about is fiscal stimulus, especially in the area of employment. And what sort of incentives can we put in place? I remember during the administration of President Goodluck Jonathan, there was the workmen acquisition incentive that allowed people, when they employ and retain for a particular period, they get some tax rebates and credits on the side. So government needs to think about targeted fiscal stimulus incentives that are very particular. And then, while you have done all of this, you also need to think about, mobilizing credit, access to credit, for important and strategic areas, whether it is food, which is agriculture, whether it is in energy and things like that. Government needs to focus, some of its efforts in that direction as well. Guarantees can also lower the cost of borrowing as well. So, in areas where government is already intervening, with impact credit, infrastructure credit guarantee, and so on, NERSAL, government needs to look at structured programs that these guys continue to provide those credit guarantees so that the commercial banks can actually loan to players in the small and medium enterprise space, in the infrastructure space, and in similar directions. So I think, let us not forget one important aspect in all of this, which is the governance and the structure of government in implementing all of this. When you look at some of the counterparts I mentioned, Egypt, Argentina, and so on, they've actually begun to look at, the cost of governance, which has been an issue that we have, put on the side. Yeah. When the president actually said, let us look at the Oronsanye report and begin to implement it. I think this is a very important opportunity, because if you use the case of Argentina and the commitment of the government to actually deal with the issue of bloated governance, corruption, and things like that, I think when you deal with those sort of issues, you then get participation from the citizens of the country, because they feel invested in what government is doing. And I think that is one of the areas where government can actually move the lever and actually achieve significant mileage.
Brilliant stuff. Yeah. Finally, the GDP figures for Q1 2024, I'm sure you saw it.
Yeah.
And, though we expect some of these policies and all of that to still impact moving forward, 2.98% is what we saw, driven basically by financial and insurance sector. What do you make of this?
Yeah, so service, I've always told people that, really.
That's the way to go, right?
Yeah. Our country is not really an industrialized country, right? For us to really get it right in terms of industrialization, you have to deal with the issue of infrastructure, from the ports to transportation to energy, electricity, and things like that. Those things will take time. So we are largely a services-dominated economy at the moment. And when you see some of the changes, the growth, especially in the services space and agri space, it tells you, the areas we should put more focus. But like I said, with rising interest rates, there could be an impact in terms of GDP growth. So the fact that we're not getting the GDP growth we expect, some of it is coming from this, but not all of it. I think the GDP growth, or the lack of it we've seen, is not a cause for concern, right? And I think that it's a comparison of where we are last year and how we are progressing. So it shouldn't be a cause for concern. But many of these initiatives, which I think would help especially the poor and vulnerable, the small and medium enterprises, and the entrepreneurs, because those are the guys who would employ. We need to look at that to ensure that our policies are driving that. Lest I forget, one important component of all of this is also ease of doing business. Recently the Chief Executive Officer of Total was talking about how investment moved from Nigeria to Angola of $9 billion. If we get it right in terms of ease of doing business, ensuring that contracts are honored, ensuring that investors are able to be certain around their investments and regulations don't change overnight, I think we could do better in terms of GDP growth.
You want to touch on the Forex while we wrap up this? The market is still having the flip-flop. We must always talk about it because it shapes our economic output. What do you make of this at the moment?
Yes, it's not going to be easy to deal with. I think one of the things we need to address clearly is our import dependence. In the energy space, I think we import everything. The dilemma or the contradiction of being an energy producer in terms of crude, and then you're importing all of that. And to be honest, a lot of expectations were on the Dangote refinery and the fact that we must commend Dangote Industries and that group for the work they've done in that space. But at the moment, we also need to guarantee that the refinery gets sufficient commitments for supply of crude from the domestic space as against importing from the US. Because, I don't have visibility of the Dangote group, but that could also still create some FX pressure. But apart from that, like I always say, gas, and we've played a lot of politics with gas, but we are largely a gas reserve country than a crude reserve country. We need to go back to that space and try to commercialize our gas as quickly as possible. The NLNG structure of investment of government with the private sector and giving tax incentives so that they can actually yield dividends within a very short period of time, I think is a good one. And again, we have a large population of English speakers, educated people looking for jobs. Now, with the FX rate, we are now a low-wage economy. We need to commercialize that. And India did a lot of that, in terms of business process outsourcing, call centers, and things like that. We can actually strategize and look at that space and see what we can come up with. And this would be my recommendation to government to get out of this.
I must thank you so much. Mr. Kenneth Erikume is Partner Tax Reporting and Strategies with PricewaterhouseCoopers. Thank you so much for starting the week with us on Business Nigeria. We appreciate this.
Thank you. Hi to my mom. I'm still a child.
Thank you so much. Yes, so happy Children's Day to everyone. Well, coming up on the show, we'll be discussing